Hey everybody, welcome. Thank you very much for joining. My name is Matthew. Today, we're going to look at the best Bitcoin valuation metric you've never heard of. All right, so here we have the lifetime price of Bitcoin up until the moment of recording, a little bit before actually April 3rd, because I'm using some network data here. Price to sales. I talked about this before. Do see my prior videos on this. Not going to do a deep dive, but basically price to sales is market cap price, which is the same thing because you just take price times shares, you get market cap. In the case of Bitcoin, it's price times units or coins divided by trailing 12-month network revenue. Now that's analogous to a stock trailing 12-month company revenue. So it's a very stock type analysis, but I said this in a prior video. I put this up. I think I was the first one to put it up in 2017 to make this comparison. In fact, I haven't really seen people do it since. You really got to look at this trailing 12-month miner revenue to make this make sense. But yeah, this is a traditional financial metric. The key caveat with this is price to sales is not like PE. PE, the very common price to earnings ratio, that will work across company, across sector. Price to sales only works within the sector. So you might be able to look at Apple and Microsoft's PE, compare them, figure out some valuation benchmarks. And you might be able to look at Toyota and Ford's PE, but you can't really combine them because one is tech, one is automobiles. Don't ask me about Tesla, but it's probably going to go more towards tech at the moment. The reason is that price to sales is before expenses. So price to sales, market cap divided by corporate revenue, you're going to get a number that is just uncomparable with a company that's not in that sector. So that's the key thing to keep in mind there. I've already said too much than I wanted to about price to sales this video, but do see more in the comments, my prior videos, if you want to learn more about how I use this ratio with Bitcoin. So let's take a look now. I'm going to show you the market cap divided by the trailing 12-month miner network revenue in an orange line right here. All right, this is on the right axis, PSR. Okay, see some huge peaks here. And I've always said I do agree with old Trace Mayer's phrasing of it's better to call these booms in Bitcoin rather than booms and busts. And the reason, and this is actually a good example of the reason, is that with price to sales, we always see higher highs and higher lows. Okay? So very quick analysis, 2013, two double tops here, price to sales was 70. All right, PSR, price to sales was 70. Here, we had a few bumps around 70, but then the blow off top at the end of 2017, 120. All right. That means the market cap at this time was 120 times more than what miners were earning over the last 12 months. So in 2017, the December 31st, roughly, it's December 19th or so, actually, I think 16th, market cap of Bitcoin divided by basically all of 2017's miner revenue, 120. Okay. And then it was even higher in 2021. Okay. It got up to 170. Market cap divided by miner revenue. All right. Notice we had a double top in 2021. Okay, in March and in November. Notice how the PSR didn't pick up the November one. It spiked a little bit here, but not nearly as big as this spike. That's interesting. I'm not saying you would have understood there was going to be a second double top or that you should have sold the second double top. I'm not saying that the second top of the double top, but I'm saying it's interesting that it only picked up the first one, just the nature of the metric. And then we heard today where the current PSR is about 197. Okay, so roughly, if you think in rough numbers now, the market cap of Bitcoin as of this recording is about $1.3 trillion. Divide that by 113 billion is the trailing 12-month miner revenue. This is an important figure because miners secure the network. All right, they don't control the network per se, but they definitely secure it. And unlike hodlers, you and me, people say Bitcoin doesn't have income It's actually not true. There are many people fighting for mining revenue while also securing. So it's just a huge component of Bitcoin is what miners make. But you got to look at it at a trailing 12-month basis to understand this. Okay. And this is on the back of my last video when we talked about the breakdown between block reward and fees. Block reward is about 90%, especially on a trailing 12-month basis, 90% of miner revenue, fees 10%. That's just where it is right now. But if you look at the total revenue, that's what you got to look at to make this PSR comparison make sense. Okay. So higher highs is one of the things I said here, and also higher lows. Okay. So crypto winter here, mid 2014, PSR was only 4 or 5. Bitcoin market cap was only 4 or 5 times higher. Trailing 12-month miner revenue. Even after the puking of 2017, it got down to not 4 or 5, about 9 or 10, double. So the low was 100% higher than crypto winter. Big drop here in COVID, but still that drop was only down to about 18, right? Yeah, 16. And then the low here during the FTX puke, which is actually probably not the lowest, might have been June, July 2022, 25. Yeah, about 25. Okay. So we went from 5, less than 5, way back in the day, 1, 2. But we went from 5 in that crypto winter to 10 to 15, 16 to 25 as our higher lows. So bottom line, let's finish off this video. You know, I like to draw trend lines. This is, again, not going to be comparable. You can't take this PSR and compare it with Apple or Tesla. Certainly not. This is different. But we can draw a trend line and we can see it's not a perfect goodness of fit, 60% R squared. We've seen 95, 97% R squareds in some of my other work. See Giovanni as well, the BTC power law handle for more work on this. But the power regression actually fits the best of the price to sales as well, even better than linear or exponential here. And we can see higher highs, higher lows, okay? And then where does that mean where we are today relative to the price, to miner revenue? Let's draw 1 sigma bands, okay? 1 sigma simply means everything inside these blue bands. Looking at the right axis now, the PSR, everything inside these blue bands, that will occur 2/3 of the time, 67% of the time. And we can see, if we look today, we're right on there. Okay, we're still in normal territory, but we're a little bit hot, upper normal territory. Okay, I'm not saying that it stops there. I'm just showing you that's what it is. Now let's look at 2 sigma. What is 2 sigma? These are percentiles, remember. So traditional standard deviations will tell us that anything 2 sigma, within 2 sigma from the mean, that's a 95 percentile event. Okay, so 95% of the observations will be between here. And because we have these booms that I mentioned earlier, the 2 sigma up is clearly rare air. And as we have higher highs and higher lows, this band is increasing constantly. All right, so we can see, again, 2011 we had big boom, 2013 we had 2 booms, 2017 we had a few, but the only one that went outside of 2 sigma was in December 2017, 2021 March, nothing in November. Pretty interesting metric, is it not? And then we can see we're nowhere near 2 sigma today. 2 sigma today would be 232x. 232 times miner revenue would be the market cap in such a situation if the PSR was in pretty rare air, rare territory. And we're not there yet. We are in a little bit hot 1 sigma territory, but we're nowhere near 2 sigma, which we have hit with this metric on every single prior bull run of Bitcoin. So never financial advice, just again trying to show you the macro. See more in the description for more on this metric. More is coming on the website soon regarding the PSR. And because I know you guys like the interactive charts. But yeah, let me know what you think about this metric. Let me know what you think about the evolving miner revenue, the very important miners which secure the network, the revenue that they earn versus the market cap, price to sales. And hope this helped you. Thanks for watching.